Islamic finance is an emerging alternative source of financing that can support infrastructure investment in regions like Africa and nations like Nigeria. For instance, the federal government of Nigeria's Sukuk bond has been deployed to force 7 key national roads to unlock the economy. On today's program, we'll be discussing Islamic finance, public-private partnership, and infrastructure investment. Joining me virtually to discuss the subject matter is the managing partner of Africa Public-Private Partnership Advisory Services Limited, a project finance consultant that is delivering the PPP and infrastructure financing component of the UK-Nigeria Infrastructure Advisory Facility, Mr. Gori Olusina Daniel.
Thank you, Bukola. I'm very happy to be here. Thanks for inviting me.
Thank you very much. Mr. Gori, there has been a lot of misconceptions around Islamic finance, but from your experience as a non-Muslim investor who tap into the IFN industry, what can you share about the market?
Well, okay. You see, from my perspective, as someone who has tapped into Islamic finance for particularly buy-to-let properties in our asset portfolio, I think that Islamic finance has come a very long way over the last 20 years. I'm based in the UK, as your listeners might want to know, and as they may be aware, the UK is the leading center for Islamic finance outside of the Muslim world, with assets of more than $5 billion.
$5 billion, that is huge.
$5 billion. And that is captured in over 20 banks in the UK who offer Islamic financial services. Let me give you one example. Our Ryan Bank, which provides Islamic finance to more than 85,000 customers in the UK. They do that with a client base that about a third of them, that's 33%, more than 33%, are non-Muslims. And for some of their products, like their fixed deposit products, about 80% of their depositors are non-Muslims. So in terms of my experience, the way that I look at Islamic finance is that it's modeled on ethical principles of fair lending, risk sharing, do no harm, and a focus on the well-being of the community as a whole. Exactly. I see it as a viable alternative for ethically minded investors and buyers of financial services.
So let's go on to another aspect of this discourse, which is of interest to me. Do you think the word Islamic finance is serving as a disincentive to prospective investors that are non-Muslims?
Well, the matter for this, this is a matter for Islamic finance institutions, to be honest, and those that promote Islamic finance. And I think it is one that they need to seriously consider. My personal view, however, is that I would not be surprised if some potential customers are put off by the overt association to a religious faith. So that should not come to anyone as a surprise. But to really tackle your question, I think that Islamic finance institutions need to seriously examine the underlying principles of Islamic finance and the motivation for Islamic finance institutions. If the motivation is to create a positive association of the Islamic faith, in terms of what it does to inspire and provide a range of viable alternative financial solutions to people of the Muslim faith who are discouraged from the more mainstream interest-based financial products, then this becomes a moot point, right? Especially if they don't really, want to focus on what people think about it, and they're promoting it to have a positive association, and not only to Muslims but also people who don't care about the overt association to the Islamic faith.
Nigeria here, some people still believe Islamic finance is only for Muslims. So
well, I think that speaks to the point, Buki, that some people do, and that perception. Sometimes perception, we've got to look at perception as reality, and that brings me on to my second point, which is that if the motivation for providing Islamic finance is more fundamental, and by that I mean if it is about mainstreaming the values and principles of non-interest finance, which I for one believe is shared by all Abrahamic faiths, and will also appeal to people who prefer equity instruments than debt, right?
Yes.
Because it has a shared risk approach.
Exactly.
Then that is the underlying principles. Then I think a review of the association might be something that Islamic finance institutions should consider because of the potential to appeal to a wider market. But I find really in the industry, people sit on either side of this divide. Some people are adamant that it can't be changed and shouldn't be changed because really it's important to ensure that people know that Islamic finance is there's nothing untoward about it. So there are campaigners and others who think, you know what, let's focus on what we're here for and realize that, maybe the perception that this is around not only proselytizing the faith, but also probably challenging people to think that if they're not Muslims, they can't access these products.
So do you suggest a name change like ethical finance or alternative finance?
I think the industry needs to have this conversation.
Exactly.
And they need to have that conversation with themselves. And I believe that the conversation is already happening, right? Some banks are already calling their products alternative financing. They're already calling it non-interest lending. They're already calling it ethical finance, et cetera, et cetera, et cetera. So the products that we have are with Gatehouse Bank, for instance. Gatehouse Bank does not call their products Islamic finance, but everything Gatehouse Bank does is Sharia compliant.
Oh.
That's in the UK. Even in the name, you don't associate Gatehouse with Islam. But everything they do is Sharia compliant. And maybe that's probably why we have some products with them.
Now, in terms of asset creation in the Islamic finance market, what are the things you expect to see happen more? Mr. Gori, can you hear me?
Yeah, I can. I'm. You just got me thinking, right? I think that a lot of the focus on. I'm getting more familiar with the Nigerian market because of the UK Nigeria Infrastructure Advisory Facility that we are supporting. But from the research that we have done, I think that the most high-profile Islamic products are the three sukuks that have been listed and issued to finance road projects.
Yes, sir.
I really think that the biggest opportunity for Islamic finance in Nigeria is in housing, right? It was certainly the key entry point in the UK, and now we're talking about $5 billion in assets, right? And I think that once you get this to the individual level, then you can start thinking about other products like insurance. You can think about venture financing. You can think about equipment leasing for manufacturing. And on the point of housing, liquidity in the housing market is the reason why there's a housing deficit of over 17 million. Now, these figures were in 2012, and today it may well be north of 20 million or 22 million. Some reports.
There are over 20 million housing deficit in Nigeria.
That was what I was saying. That's the projection. I wouldn't be surprised if it's over 22 million. And it's and from a risk perspective, this is easy pickings for Islamic finance. Because essentially the way that these products work, the bank owns the property until the bank's contribution to buying the property has been offset, right? So there's no question about ownership, right? There is a defined end selling point, so there is no interest involved, and there's a motivation. It's just like what happens at the moment. I find this a lot in terms of people who buy Okadas, for instance, or Ubers, right? They work off the purchase price that is predetermined, right? So you have somebody who gives you a car or who gives you a motorcycle, and then you make returns on a weekly, on a monthly basis until it is paid off. Now, this is a model that Islamic finance for mortgages are based on, right? And the the ownership is not transferred until every part of that agreed price is paid off, right? And this can be easily applied to housing. And I think if the Islamic finance community in Nigeria gets behind the Nigerian housing market, and this is part of the government's economic sustainability plan that was just released last month, you can find that deficit could easily be reduced, and you will find a situation where households all across the country will not care what it's called if they can access this finance and own their own homes. But I do think that Sukuks, where we started, is something that we keep doing, and I certainly want to see more Sukuks, financing, perhaps, hospitals, which are most needed.
Apart from road infrastructure.
Yeah, because there's social infrastructure that can be financed this way. We are also thinking about renewable mini-grids, for instance, home solar solutions financed by Sukuks, and I'm talking about at an estate level, not at an individual level. Because power is something that every household needs, and studies have shown that they're willing to pay for. And if we look at it the way that we look at Islamic finance, particularly for buy-to-let properties in the UK, as effectively a rent-to-buy scheme, you will find that there's a demand for it. The question is, what is the appetite of the Islamic finance institutions and their capacity, really? Not just in terms of having conversations like this, but actually having, capital that they're willing to deploy.
Your views are well noted, Mr. Gori. So what is your perspective on the Sukuk bond that has been leveraged to deepen investment in infrastructure in Nigeria? And what other instruments can be assessed to support economic development?
Well, I think that in terms of what we have seen, I think Sukuks present a real sense that we've just seen the icing on the cake, right? Now, Sukuks from a non-Arabic sense, non-Islamic sense, are effectively bonds. They're bond instruments, right? That are subscribed to by investors who essentially who pay into these bonds with the expectation that they will get a coupon return. And in the case of Sukuks, I believe it's a bullet payment at the end rather than annual coupon payments. These are attractive, particularly to people who want to share risk and also have a real interest in the sector in which the Sukuks are being applied. And that's why you find that the road Sukuks were oversubscribed. Everyone in Nigeria has been impacted by the consequences of a bad road network. That's either by the loss or injury of a close family member or the amount of time they sit in traffic, right? And so these sort of things make it easy for people to say, look, I'm willing to subscribe to that. And, like I said, what I want to see is Sukuks, many Sukuks, right? Not just one or two, focused on hospitals, schools, renewable mini-grids, just across a wider range of asset classes.
Yes. Sukuk still remain a viable instrument in Islamic finance, and major countries invest in Sukuk to fund infrastructure and other sectors.
Yes.
What should be the policy thrust of the government in areas of attracting more bankable PPPs, which can be financed by the non-interest finance market?
Okay, you know what? I actually think that the starting point for Islamic finance is not necessarily government policy, because that policy is already in place, right? I don't think we need more policy. What I think we need greater awareness, right? Greater awareness and appetite of the capacity of finance institutions, right? In terms of their asset base and their appetite to engage in PPPs. I certainly, for one, our program would certainly like to speak with Islamic finance institutes who have an appetite for PPPs, because we would want to learn from them, what their criteria is for financing and supporting. And we would want to share with them what we see as a pipeline of bankable PPP projects that are emerging from states all across Nigeria that they can engage in. And we can also help in terms of the deal origination, right? So the due diligence that they need to satisfy to assess the risk of a project, right? And that is part of what UK NIAF is bringing to the Nigerian space, funded by DFID, the Department for International Development of the UK, as part of UK aid, to actually provide technical assistance in preparing these projects, so that not just Islamic finance, but other sort of mainstream finance instruments will be able to look at them and consider them as assets that can be invested in. So we'd definitely like to speak with Islamic finance institutions that are interested in PPPs, so that we can determine what their appetite is, what sort of projects that they're interested in, so that as we go through this pipeline development process, we can bring and package projects to them that have been properly prepared, and they can choose from a range of projects to participate in. Not necessarily wholly, because one of the things that I believe that the approach to financing projects, particularly large-scale infrastructure projects, is where you take a very blended approach. So you take financial instruments for multiple organizations, and that way the risk is shared across multiple organizations, not just the one.
Before I let you go, Mr. Gori, what can you say are the opportunities for Islamic finance in Nigeria?
You know what? I think the opportunities are vast, right? And I really think that Islamic finance is certainly part of a basket of financial instruments that Nigeria needs to be able to go from where it is now, post-COVID, towards economic recovery and sustainability. It's just one of a number. And I think that the voice of Islamic finance is not heard where it needs to be heard. And there are a number of reasons for that. Some of those that we've talked about today, because perhaps we're coming into the room with people associating it with the religious faith, when people tell us that that's not the case. But beyond that, away from all of that, I think that the real focus is actually upgrading the whole process of deal origination. How can Islamic finance institutions be in the room, right, where viable projects are being considered and financing options are being sought, right? So we're talking about really greater awareness about the capacity of Islamic finance institutions, but also a clear indication of their appetites. So really, in summary, I really think that the opportunities for Islamic finance in Nigeria are limited to the imagination and appetite of Islamic finance institutions. The second thing I should talk about is the fact, and the final thing is that, I'm aware that the shared risk model of Islamic finance institutions, right, requires them to make some upfront investment in risk management and due diligence capabilities. And it's only when that's been done that it can really signal for us, true appetite. It's when you have sector specialists in power, in health, in education, in venture finance, in asset leasing. When you have those, that's really when you can demonstrate appetite. Because if I bring you a project in a sector that your people don't have experience of, you will overestimate the risk. And that lack of familiarity will be the reason why you don't deal, right? And UK NIAF, and my last plug for UK NIAF is trying to address this problem, right, by actually providing technical assistance, particularly to government MDAs, in terms of structuring projects in such a way that the risks of those projects can be fairly assessed. And perhaps, as a parting shot, perhaps an advice that I'll give Islamic finance institutions is perhaps to piggyback on mainstream financial institutions who have, perhaps, a deeper appetite for projects, and to be in a co-finance relationship with them for investments that meet their ethical criteria.
Thank you so much, Mr. Gori Olusina, for the interesting discussions on how Islamic finance can serve as a vehicle for expanding Nigeria's infrastructure and lifting millions out of poverty. So, considering the latest report from the National Bureau of Statistics that revealed more than 82 million Nigerians now live in poverty. So in this space, non-interest finance can be used as a veritable platform to address this malaise. Thanks for your broad perspective and insight. We appreciate that.
Thank you, Bukola. Thanks for having me.
You're welcome. To our viewers, according to Professor John Davis, the chairman Ultra Capital United Kingdom at a recent IFN forum said, the asset-backed, ring-fenced and project-specific nature of Islamic finance structures and their emphasis on sharing risk make them a natural fit for infrastructure public-private partnerships. And that brings us to the end of this week's episode on Islamic Finance Weekly. To watch more videos, read news stories, reports, and analysis on Islamic finance, log on to our website, www.proshareng.com. Also, you can engage us on our social media handles displaying on the screen. Till we come your way again next week. Thank you for watching, and bye for now.